All right, let's talk about your money, and more importantly, how you can make it work way harder for you. If you're tired of your traditional bank account just kind of sitting there doing nothing, then you're in the right place. We're going to dive into the world of DeFi yields, and believe me, it's a potential game changer. Let's just get right into it.
So let me just ask you this. Does it ever feel like your bank is, well, actively working against you? You know that feeling? Like you're just a number on a spreadsheet designed to make them rich, not you. If you've ever felt that frustration, trust me, you are not alone.
And this slide just says it all, doesn't it? Your bank might give you a teeny tiny 0.4% on your savings, which, by the way, is just you lending them your money. But the second you need to borrow from them with a credit card, bam, they'll hit you with 24% or more. They're literally using your cash to make an absolute fortune and then tossing you the crumbs. The system just feels fundamentally broken, especially for our generation.
But what if there was another way? I mean, what if you could just cut out that middleman, the bank that's siphoning off all the value? What if you could deal directly with the financial system yourself? That's the huge promise we're going to explore today.
And that brings us to decentralized finance, or what everyone calls DeFi. And the big idea here is so simple but so powerful. You get to be the bank.
So what even is DeFi? Well, think of it like this. It's a parallel financial system that's built entirely on software, on code. There are no fancy branches, no bankers in suits, no one deciding if you're good enough for a decent interest rate. It's just a set of rules that anyone can tap into, and it treats everybody exactly the same. To make this a little more real, let's use an analogy. Imagine a totally automated parking lot for your money. You drive your money in, you park it in a spot. That spot is basically what's called a protocol, and as soon as it's parked, your money automatically starts earning parking fees. That's your yield. There's no attendant, no one to pay. It's all handled by these automated programs called smart contracts.
Now, this is where it gets really interesting. Look at the flow of money here. On the left, with old school banking, you can see all those steps where the bank is taking its cut. But on the right, in DeFi, you go straight to the smart contract. It's just a way more efficient system with almost no overhead, which is why all the profits that used to go to shareholders and executive bonuses can now go directly back to you.
Okay, so that's the big picture. But how do you actually make money in this new world? Let's break down the different ways, and we'll start with the easiest and work our way up.
So, level 1. The first and most straightforward way to earn is just through lending and borrowing. This is really the bedrock of DeFi, and honestly, it's the safest place for anyone who's just starting out. You're basically just providing your money for other people to borrow, and you earn interest on it. Simple. And the difference is just staggering. I mean, look at this table. If you put 10 grand in a normal savings account, you might get, 40 bucks in a year, if you're lucky. Now, you put that exact same amount into something called a stablecoin on a DeFi lending protocol, you could be looking at over $500. We're talking more than a 10x difference in what you earn just by cutting out the bank.
Okay, so once you get the hang of lending, the next level up is getting involved with decentralized exchanges, or DEXs. This is where things get a bit more interesting.
I love this analogy. Think of a DEX like a vending machine for crypto. You don't need to fill out forms, create an account, or get approved by anyone. You just walk up with your digital wallet, put one crypto in, and another one instantly pops out. It's all fast, automated, and anyone can use it.
But here's the really cool part. You can do more than just use the vending machine. You can actually provide the stuff inside it. When you do that, you become what's called a liquidity provider, and you earn a tiny percentage of every single trade that uses your funds. It's kind of like owning a tiny piece of the stock exchange itself and just collecting fees all day.
And finally, we get to the expert level, yield farming. Okay, this is where things can get really complicated. It's all about moving your money between different protocols and exchanges, always hunting for the best rates and rewards, and sometimes even using borrowed money to boost your returns. This is definitely the highest risk, highest reward part of DeFi. It's the deep end of the pool for sure.
But that highest reward part, it comes with a huge flashing warning sign. All of this amazing potential doesn't come for free. Higher yields always mean higher risk, and it is so important to understand what you're getting into. This is not a magic money machine. And the risks are very real. The code itself, those smart contracts, can have bugs that hackers can find and exploit. You have shady developers who create a project just to run away with everyone's money. That's called a rug pull. And then, of course, there's the simple tech risk. If you lose the password to your digital wallet, your funds are gone forever.
There's no 1-800 number you can call.
And yeah, this isn't some theoretical thing. Look at this number. Over $3 billion have been lost to DeFi hacks and scams in just the last few years. The main takeaway here is you have to approach this whole space with a ton of caution and a healthy dose of respect for the risks.
Okay, so knowing those risks is the first step, but that obviously leads to the next big question. How can you actually get involved and capture some of this upside without getting totally burned?
The good news is there is a safe way to start. It's all about doing your homework, starting small, and having a clear plan. So let's walk through exactly what that looks like. The absolute best place to begin is with stablecoins. So these are basically crypto assets that are designed to always be worth $1. This is huge because it means you can tap into those awesome 5 to 10% DeFi yields without also having to stress about the crazy price swings you see with things like Bitcoin or Ethereum. And this slide right here lays out the perfect game plan. For week 1, just focus on education and maybe start with a really small amount of money, like say $100. Then in week 2, try lending that out on a big trusted platform like Aave or Compound. Week 3, maybe you dip your toe into a simple liquidity pool. That's the vending machine thing we talked about. The main point is to move slowly, learn as you go, and only put in more money as you get more comfortable and understand what you're doing.
And these rules, you guys, these are non-negotiable. I cannot stress this enough. Never invest money you aren't prepared to lose. Always bookmark the real websites to avoid scams. Triple check every single transaction address. And the big one, never ever, under any circumstances, share your private keys with anyone. If a random person messages you directly offering to help, they are trying to rob you, period.
So let's wrap this all up. The main takeaway is this. In decentralized finance, you are your own bank. And that's incredibly empowering, right? It means you get to keep the rewards that used to go to all the middlemen. But it also means you inherit all of the responsibility for keeping your money safe.
Look, this tech is still new, and it's definitely still risky, but it offers a really powerful alternative to a financial system that, frankly, isn't working very well for a lot of us. So the final question I want to leave you with is this. Could this, in some form, be the future of your savings account?